Hey, welcome back everyone. This is Uncle Frank and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. So what did I tell my subscribers to watch for? I said keep an eye on the BRICS summit and then watch for what leaks out of the IMF meetings this weekend, right? Well, BRICS was more talk than action, but now take a look at this. Now, this headline is from today, Saturday. Interview. Martin Armstrong warns IMF to replace the dollar with XRP and XLM. BRICS economic reset is here. Now, this isn't some unknown author writing an article for some online crypto rag. This is Martin Armstrong, a giant of the investing community. Now, I'm not saying this is going to happen. I'm not saying it's happening now, nor am I recommending anything, including buying XRP or XLM. I'm merely pointing out that one of the smartest guys out there had this to say. This isn't the first time he said it. He remarked the same 5 days ago. Go see for yourself, go watch the video, and draw your own conclusions. When it comes to XRP, I'm as frustrated, disappointed, and disgusted with recent events surrounding the coin as I must assume many of you are. We missed the entire recent crypto rally because of the case. Even when we win in court, we have to deal with appeals, extensions of the appeal, ex-Ripple execs giving millions to a Democrat that doesn't know a cryptocurrency from her ass. But I can still hope for Gensler to be fired and for the SEC to lose in court again, so anything's possible. Still the best mousetrap on the planet for cross-border payments, and still better than Bitcoin in every measurable performance metric. For now, I may nibble if I can get XRP under the 50-cent mark. At the time of this recording, I've got the coin at 0.5122, down 5.37% over the past 7 days. Those familiar with this channel will also recognize this table. Take a screenshot of potential white or black swan events under Geopolitical is, of course, the Israeli attack on Iran. Well, that event is currently underway. By now, I'm sure you've heard Israel launched direct strikes against Iran early Saturday in a high-stakes retaliation to Tehran's ballistic missile barrage earlier this month. Israel said it hit military targets, which did not include energy infrastructure, according to an Israeli military source. Iran has said it's entitled to defend itself following the attack, but Iranian media appears to be downplaying the strikes, reporting limited damage at military sites in 3 provinces. The army said 2 soldiers were killed. A senior U.S. administration official said President Joe Biden encouraged Israel to design its attack against Iran in a way that would deter further escalation. World leaders have been urging the 2 sides to avoid a wider regional war. To Uncle Frank, this was just a show. It was telegraphed. Bibi Netanyahu met with Biden and agreed not to hit nuclear or oil infrastructure targets and focus on military targets alone. In return, Biden gave Israel the THAAD missile system and 100 U.S. troops to help out. All Biden cares about is not striking oil targets, which could result in $100 to $200 per barrel oil, and his party does have an election coming up. Notice how CNN left all that out. What Uncle Frank wants to know is how all this is going to affect oil, but more importantly, silver. I recently reported that 5 U.S. banks face billions in losses as silver's price spike hit short sellers hard. And Uncle Frank was looking to buy the SLV calls with an expiration just beyond the Fed meeting after the election, specifically Friday, November 8th. Not investment advice or advisor. But this little attack by Israel may have spoiled my plans. And from the Wall Street Journal last week, hedge funds have closed out more than $10 billion of short positions or bets that stocks will fall in the U.S. and Canada so far in October, a signal that they may be positioning for a year-end rally. Quote, Short sellers are actively trimming their exposure as the market rallies, as they have incurred mark-to-market losses instead of holding firm and waiting for a market reversal. That comes from the managing director of predictive analytics at S3 Partners. So what do they want us to know over at the IMF? International Monetary Fund Managing Director Kristalina Georgieva warned on Thursday that the world is in danger of becoming mired in a low-growth, high-debt path that will leave governments with fewer resources to improve opportunities for their people and tackle climate change and other challenges. The result is increasingly dissatisfied populations. No, Georgieva said during a press conference during the IMF and World Bank annual meetings in Washington. Where do you stand on government-funded science and the environment, Uncle Frank? Well, I can't say or my channel will be demonetized, but I can report on what others have said. Since we do meme stocks on this channel, let's look at a couple of memes. On your left, government-funded science. In the 60s, oil reserves will be depleted in 10 years. In the 70s, another ice age in 10 years. In the 80s, acid rain will destroy all crops in 10 years. In the 90s, the ozone layer will be destroyed in 10 years. And the 2000s, the ice caps will be gone in 10 years. None of these catastrophes happened, but all resulted in more taxes and regulation. And on the right, day 12,207, without a single accurate prediction by the global warming cartels. Guys, try to understand nothing is happening suddenly or out of the blue. These events are being carefully planned and orchestrated. So in my opinion, if you're wondering if China will attack Taiwan, your only hint will come from headlines like this. Taiwan Semiconductor suspended shipments to China firm after chip found on Huawei processor. You see, they have to set it up properly before it actually happens. They want you focused on P. Diddy, the World Series, and interviews with billionaires like Bill Gates, who said it's wild that we do have billionaires. Gates, worth 100 plus billion, said he'd be happy if they took away 62% of what he owns. He also said the rich in America should pay more in taxes. What he won't say is the truth. 40% of households will pay no federal income tax this year. Some 72.5 million households, or 40% of households, will pay no federal income tax. That's 2022, down from the pandemic high of 60% 2 years ago, according to estimates from the Tax Policy Center. So when the left tells you the rich aren't paying their fair share, they're right. They're paying the 40% share too. And now the left is importing millions and millions of new non-taxpayers, which will overload our schools, our healthcare system, and strangle our welfare safety net meant for American citizens that are struggling. Definitely one of my favorite headlines from Friday. Tesla stock rally steamroll shorts, erasing years' gains in one day. By the end of Thursday, Tesla had added $150 billion to its market value on a 22% stock surge, the biggest one-day jump since 2013. Stock sellers, on the other hand, took an estimated mark-to-market loss of $3.5 billion, according to data from S3 Partners. Even worse, their year-to-date profit of $1.7 billion was erased. Shorts are now down $1.8 billion for 2024. May Elon Musk burn you shorts again and again until you're bleeding from the nose, mouth, and anus, especially you, Bill Gates. All right, before we get to what's ahead, let's recap with Wall Street Breakfast. The streets saw a volatile week, one in which the performance of all three major averages differed significantly from each other. The benchmark S&P halted its longest weekly win streak of the year a span in which it took its number of record closes for 2024 to 47. Meanwhile, the Dow slumped for the week, weighed down by disappointing quarterly results and negative updates from its constituents. Conversely, the Nasdaq extended its weekly win streak to 7 and took out a new record intraday high after 74 trading days. The S&P and Dow were dragged down by disappointing quarterly performances from industrial giants such as GE, 3M, Honeywell, and Boeing, and a slide in McDonald's due to the fast food giant being linked to an E. coli outbreak. Yeah, that was a day after Trump manned the French fry station. I bet McDonald's won't make that mistake again. Yeah, I said it. These aren't the Democrats your grandparents voted for. They like when rioters burn down our cities. They even bail out the rioters so they can resume their arson and looting activities. These are people that defund the police, shut down your church during the lockdowns, but left the liquor stores open so you can buy lottery tickets. Anyway, there was also a bond sell-off driven by a recalibration of the Fed Reserve's rate cut expectations, which also put pressure on equities. The Nasdaq, on the other hand, got a boost from Tesla. The electric vehicle giant ended up being a headline maker after posting one of the strongest quarterly reports in a while and projecting as much as 30% deliveries growth in 2025. The stock soared to its best day in over a decade, adding more to its market cap than the combined valuations of GM and Ford. Now, here's the important part. The earnings season shifts into top gear next week, with investors receiving financial figures from 5 of the Magnificent 7 firms. That represents $12 trillion in market cap, or 23.2% of the S&P 500 alone, per Deutsche Bank. For the week, the S&P slipped 1%, the Dow slid 2.7%, but the Nasdaq gained 0.2%. On Friday, S&P was down 1.74, currently 5808.12. The Dow lost 259.96, currently 42,114.40. Nasdaq added 103.12, 18,518.61. Crude oil added $1.50, 71.69, and gold added 11.90, finished at 2760.80. All right, let's do the calendar. The annual meetings of the International Monetary Fund and the World Bank Group end this weekend, but we still could get some crazy debt warnings out of this meeting for Monday morning, so be looking for that. All right, nothing important for Monday other than the Israelis have attacked Iran. That could obviously get worse or better before the bell. Tuesday, October 29, 10 a.m. Eastern Time, October consumer confidence and job openings. Wednesday, 8:15 a.m., ADP employment, 8:30 a.m., GDP. Now, Thursday, October 31st, and Friday, November 1st, is my 2-day atomic bomb window. All at 8:30 a.m. on Thursday, personal income and spending, initial jobless claims, and the Fed's favorite, the PCE index and the entire data group. Then on Friday, November 1st, 8:30 in the morning, U.S. employment report and unemployment rate. These 2 days could easily determine the next interest rate decision by the Fed. As of today, we are only 10 days to the nuttiest election in U.S. history on November 5th. Do you guys know our next Fed meeting is scheduled the 2 days after the election, November 6th and 7th? Did you know AMC will report earnings after the close on November 6th, and then Archer will report on Thursday the 7th, just after we get the rate decision? And if all that wasn't enough for the markets to deal with, here's the earnings lineup for the coming week. Go to Earnings Hub and click on your favorites for the details. Guys, it's not just Uncle Frank worried about what's just ahead. Barron's is concerned too. The stock market enters the danger zone. Investors were disappointed by a mixed week for the stock market. They could look back longingly on it if everything goes wrong over the next couple of weeks. Quote, "You don't need much of an excuse to move the market down," said Keith Lerner, co-chief investment officer at Truist Wealth. But excuses there were, starting with bond yields. The 10-year Treasury yield rose to 4.22% from 4.08% just this past week, and from a 2024 low of about 3.62 hit on September 16th. Now here's the basis of his argument, and I concur. The rise is likely a reflection of the fact the Fed Reserve will cut interest rates fewer times than investors had thought after September's FOMC meeting, a result of inflation being above its target and a job market that has grown faster than expected. That's why the data coming from this Wednesday, Thursday, and Friday are so important. This channel has been devoted to watching for swans, mainly because many of my subscribers are still trapped in AMC and other meme names and are looking for a way out. I'm not here to give false hope, nor can I promise any desired results, but I can point to things that are ahead, such as this headline. Whiplash week for U.S. bonds suggests more volatility on the horizon. Treasuries traders wrapped up a tumultuous week in which a gauge of bond market volatility soared to a new high for the year, suggesting more upheaval to come. In a furious 5 days of trading, yields first jumped, sending the 10-year yield above 4.2% for the first time since July. The moves came despite few new catalysts, as investors continued to reassess their outlook for interest rate cuts from the Fed Reserve and for the U.S. election. That's the MOVE index on your screen, guys, and it's breaking out. And here's a little bit on Bitcoin. October is starting to live up to its name. The aggregated open interest of Bitcoin futures across crypto exchanges rose to a one-year high of 31.79 billion on October 19th. This coincided with Bitcoin rising to the 68,000 level on the same day, and U.S. spot Bitcoin ETFs recording 2.1 billion of net inflows last week, the largest since March. Meanwhile, the U.S. SEC approved options on spot Bitcoin ETFs earlier this week, and CryptoQuant shared that institutional Bitcoin ownership, mainly via spot ETFs, now equals roughly 20% of all Bitcoin. And this is all the shit we XRP holders are missing out on, thanks to Gary Gensler. And to the one guy who always points out that if we let Wall Street have ETFs and options on XRP, they will manipulate it. Guess what? If the coin starts trading over 200 per coin, I'll join you in complaining about Wall Street manipulation. Not investment advice or advisor. And don't worry, guys. Uncle Frank will keep you apprised of all the ongoing cases against the Wall Street degenerates. Adam Aron's buddy from Apollo, Leon Black, his rape case will head to trial in New York federal court on October 29th. Bill Wang's sentencing in the Archegos case has been postponed to November 20th, and short seller Andrew Leff's fraud trial has been moved to September of 2025. Can you see the writing on the wall, Gary? Trump pledges to fire SEC Chair Gensler on day one if reelected. Kamala Harris's team is considering these candidates to replace SEC Chair. Gary Gensler's contentious reign over crypto approaches its twilight. Gary Gensler should leave the SEC in 2025, says Representative French Hill. Hill said Gensler's fear-mongering at the SEC is unconstitutional and misuses the agency's regulatory authority. Gary Gensler's reign of terror on crypto will soon end, says Ripple CEO. You see, guys, why we may not like what that $11 million donation to the Hyenas campaign did to the price of XRP, I'm starting to think that was the cost of shoving Gary Gensler into the trash can where he belongs with the other rats. According to the Motley Fool, billionaire scumbag Ken Griffin just increased his position in this dividend stock by 5,848%. Here's why now may be a great time to buy. Although you may not be familiar with Kenvue by name, I suspect you're well aware of the company's leading health brands. Kenvue is the business behind brands such as Aveeno, Listerine, Zyrtec, Tylenol, Motrin, Benadryl, Neosporin, Neutrogena, Nicorette, Band-Aid, and so much more. As the flu season nears, Kenvue may witness some seasonal high demand levels for its over-the-counter allergy and cold treatments. Kenny, I hope Kenvue sends you a gift package of all their products in federal prison one day to trade for saving your rectum. I actually like this idea, and if there's a correction or a crash in the market, I'm going to pick some up at lower prices than Citadel, so I can benefit from all their cheating on the trading and market making on the stock. There's the daily on Kvue. Look at those juicy gaps on that sucker. Now that Kenny owns it, I hope to fill those on the way down and pick up this bitch at far lower sale prices. KVUE closed at 22.64 Friday, down 33 cents or 1.44%. The stock pays a dividend of 3.62% at this level, but I'm going to wait for the big sell-off so I could get in under Kenny and ride his cheating coattails until they arrest this piece of shit. And for my Archer Aviation fans, the eVTOL space is starting to heat up. Who remembers that loser, Jason Mudrick? Well, Mudrick Capital just made a play for control over eVTOL developer Vertical Aerospace. Stay tuned. On your left, you can see the problem. Traffic nightmare expected Friday due to World Series and other events in LA area. And here's a post from the boss over at Archer Aviation. Archer's LA network can't come soon enough. Good luck getting around town tonight in Southern California. Yeah, you can be that cocky when you hold the key to solving the problem. LA will be ground zero for our new eVTOL business. We're witnessing the birth of a new industry, and I'm in on the ground floor, not investment advice or advisor. You see the network map on the right? So you'll be able to fly from Orange County to SoFi Stadium in 10 minutes or so instead of driving an hour? Good luck, shorts. Guys, I'd be lying if I said I'm not enjoying this shit. It's coming, and there's nothing the shorts can do about it but cover. From the Washington Post. How soon will we have flying taxis? What to know after the FAA ruling? For the first time in decades, the FAA recognized a new category of aircraft, an electric vehicle that can take off and land vertically. Archer applauds FAA's final rules for operating eVTOL aircraft. FAA rule creates operating environment for air taxis. Air taxis take one step closer to reality with FAA rules. An FAA rule update clears the runway for Jetsons like air taxis. Okay, let's run through the basic stats as of Friday for the favorites. Archer Aviation, short interest, 59.14 million shares. Short interest ratio, 4.3 days to cover. Short interest as a percentage of float, 26.6. I've got Max Payne at 3 for the November 1st expiration, and as of Friday, I see 500,000 shares available to lend in short at a fee of 4.03%. AMC short interest, 52.75 million shares. Short interest ratio still elevated, 10.67 days to cover. Short interest as a percentage of float, if you believe this, 15.71%. I've got max pain at 450 for the November 1st expiration. And as of Friday, 2 million shares of AMC available at a cost to borrow fee of 1.64%. GameStop, short interest, 35.96 million shares. Short interest ratio, also elevated, 10.43 days to cover. Short interest as a percentage of float, 8.8%. I see max pain at 2050 for the November 1st expiration. And as of Friday, 2.3 million shares of GME available to lend at a cost to borrow fee of 0.37%. And Gensler mentioned GameStop last week. GameStop meme stock craze prompted market plumbing changes, says SEC Chair Gensler. The SEC embraced shorter settlement times after the GameStop short squeeze. GameStop's short squeeze in 2021 taught the SEC several key lessons. Among those highlighted in a Monday speech by SEC Chair Gensler was the need to modernize equity markets, in part by embracing shorter settlement times. A retail-led movement to bet big against Wall Street short sellers caused GameStop's stock price to spike nearly 4 years ago amid the meme stock craze. Forced to hold or sell shares skyrocketing in price, restrictions imposed by several brokerage firms blunted the rally that was later enshrined in stock market history and recounted in books and films. Gensler, an unwavering critic of the digital assets industry, partly pinned the restrictions on lack of market efficiency. Ultimately, a shift towards shorter settlement times that experts say blockchains benefit from improved upon mechanics that stifled some GameStop investors. Quote, many everyday investors lost access to the market at a critical time, Gensler said. The longer it takes for a trade to settle, the slower the plumbing, the more risk our markets assume. Yeah, but Gary, you failed to mention that you okayed going position close only to save Wall Street predatory short hedge funds, their prime brokers, and their clearing firms at the expense of retail investors who did nothing but buy and hold. Meanwhile, you failed to mention the unchecked naked shorting that created the crisis, the spoofing, the layering, the misuse of dark pools, the misuse of algorithms, the hit pieces in the press, the marking of short positions as longs, and the use of tokenized securities as false locates. Someday they will write books about all the crimes you permitted, enabled, and ignored. On the popcorn bucket front, got this email today. Venom is back. Order the exclusive limited edition popcorn bucket today. Stock is limited, so be quick. I gotta admit, that one is pretty cool, but we could sell 1 billion of these, and AMC Investor Relations would still be silent. In my opinion, that will be a sign that Adam's obligation to Wall Street may finally be over, and he will finally act on behalf of the shareholders instead of the interests of Wall Street. The day AMC Investor Relations actually resumes supporting the stock price again. The other thing I'd be pleased to see is if Adam, his entire management team, or even one board member would begin to buy the stock again. These people haven't purchased a single share in 6 years, but managed to sell over $1 billion worth to us. And if I sat in this boardroom and heard what Adam was planning to do, I wouldn't have bought any either. I introduced my channel to the Gabelli Utility Trust first when it dropped under 6, mainly because that's the only time I accumulate it, because when it drops under 6, the yield gets over 10%, and this investment pays a monthly dividend as opposed to a quarterly one. This is the weekly chart on your screen, and since many are expecting a correction or a crash, I need to know which levels to watch. I think if GUT can hold 475, I may buy more there. If I can't, I'll look to the monthly chart on the next screen to see where GUT bounced the last time everything went to hell in a handbasket. Now here, guys, you can see the monthly on gut going back to 2017. I'm looking for the historical bottoms when the market is under stress. These will be easy for me to remember because they're so close to whole numbers, and I put some arrows so you can see the bottoms. If there is a sell-off, I'll be watching levels of 450, just above 4, then 350, and even 3. Gut closed at 5.06 on Sunday, down 5 cents, or 0.98%. At this price, gut pays a dividend yield of 11.63%. This chart should also indicate that Uncle Frank is never interested in selling his monthly dividend payer at prices under $6.50. That's the top arrow. This is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. Many of you know Uncle Frank likes to trade the VIX, or the CBOE Volatility Index options. Uncle Frank grew up in the shadow of that exchange and typically likes to go long calls when the index is touching or under 15. See the red line there? With expirations just beyond significant economic events or releases, like the upcoming election or the two-day Fed meeting that will immediately follow it. So Uncle Frank is currently tracking the November 13th calls, not investment advice or advisor. Meanwhile, on Friday, that's a little black chart on your left, the VIX scored a low of 1823, rose to a high of 2051, and finished the session at 20.33, up 1.25 or 6.55%. Guys, I want to end this episode with this headline from Saturday afternoon. Bank of England to press on with digital currency in case banks fall short, Bailey says. Isn't that a strange choice of words? Maybe it sounds strange because this banker is finally being honest. The Bank of England is reluctantly pressing on with work to create a form of digital money accessible to the general public as commercial banks risk failing to keep up with less regulated tech firms. Governor Andrew Bailey said on Saturday. Bailey's remarks build on his long-standing concerns that he does not want to see day-to-day payments or banking-type services shift to cryptocurrencies or services from tech companies that are less safe or private than banks. The BOE and Britain's finance ministry have said they will not make a final decision before 2025 at the earliest whether to go ahead with a state-backed digital pound or central bank digital currency following a consultation which drew widespread concerns about privacy. That CBDC is not my preferred option, but it's one we can't rule out, Bailey said at the Group of 30 in Washington, a forum for central banks and commercial bankers. While Britain's electronic payment infrastructure already provides fast transfers with no upfront cost for the public, future forms of digital currency could offer more options in areas such as automatic payments. Yeah, but this headline wasn't about faster payments and transfers. You said it's under consideration in case banks fall short. That's two very different things, isn't it? He continued, commercial banks might be avoiding innovation because they made too much profit from the current system, Bailey said. Now that I believe for some reason. Quote, to be particularly frank about this, if the rents that are being earned from the rails, meaning the payment systems, act to inhibit innovation and act to inhibit competition, that is why we need a retail CBDC on the table, Bailey said. I've always believed the central banks view cryptocurrencies as competing currencies and would only adopt them if they could use them to paper over huge policy mistakes. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.